Good evening, everybody. I've kind of had to ad-lib tonight. We are going to do sectors because when we set up this kind of scheduled for tonight, we started to see some weakness in gold and silver, and then started to see some strength in crude oil. But since then, not a whole lot of strength in crude oil and still continued strength in gold and silver. So anyways, we will be going through this. Yes, Glenn, that's what we're going to kind of analyze tonight. So this is going to be pretty choppy tonight. We're going to start off with kind of what we looked at, or what do we look at as far as the different sector analysis and basically the commodities that might be affecting that sector. Then we'll go to sector analysis using use TC2000, and then we'll go to live charts. The problem right now is that there are so many good charts out there. It's a matter of trying to fix one, finding or nailing it down to the few that are good trades, even though there's tons of good trades out there. So this is going to be kind of a mishmash, but we're going to kind of concentrate on sector analysis. We can see what the Dow has done. Look at the wedge formation. And then look at what we had as far as signals last week. A hammer off the 50, a hammer doji off the 50, a gap up through the T-line, starting the uptrend back, and then there was the top of our wedge. And what did they do yesterday? They not only went through it, they gapped up above it and went through it. So you look at that and you have to kind of just use simple common sense analysis of what was human nature doing at this level. They weren't concerned about this resistance level anymore. They went right through it. Same scenario. Oops. Same scenario. What's happened? How come I can't go to it? On the NASDAQ, we can see how it kept holding up here above this resistance or this support level. And then look at the pattern or the signal we had. We had a bullish engulfing type signal, close above the T-line. Then they did a doji type signal. But here's an important thing that you always want to keep in mind. If you see a pullback that comes right to the T-line and takes it back up, remember, nobody has the T-line on their charts. So when we see it move back to the T-line, we know that it has hit a natural support level, and when we see it come back up from there, that's a pretty good testimonial to say they aren't selling it off. They came back and hit the natural support level and now taking it back up. Then notice what they did the other day. They gapped up through this resistance level. So you had a doji sandwich with a best friend gap up through the resistance. What can be the assumption? Well, if this is the top of your channel up here, we might still have a pretty good strong run for a while. So the thing that really puts us at a great advantage is recognizing the patterns and the signals that kind of confirm those patterns. This is what I call 2 + 2 analysis. If I can see a pattern setting up, we're right here at a breakout level, and I have a doji sandwich that breaks out through that level, I know I can be buying with great enthusiasm right here. Even though we're up here in the overbought area, remember what our criteria is for the stochastics. We want to buy the signals when the stochastics are in the oversold area. We want to buy the pattern breakouts when the stochastics are usually up in the overbought area. But the fact that they did a doji sandwich breakout from this slow curve type move, breaking out through the resistance level, puts us in situations where the probabilities are pretty good that we're going to be in the right direction at the right time. And with the element of investor sentiment information built into the signals, we have the advantage of not also knowing which direction the price will move, but we can pretty much calculate which ones are going to have the strongest price moves. So we could take that same information. If we're analyzing a commodity and we see that slow curve, we see that breakout, and we're getting ready for the next price move, this is 2 + 2 analysis. If gold prices are moving up, this makes it much more likely to start analyzing to see which gold stocks might be participating. So we can see in our recommendation of GFI a good while back that we had a best friend gap up through the resistance level, and then what's it done ever since then? They've never been able to close it below the T-line. So one analysis is, what's the underlying commodity? Is gold, whatever commodity, crude oil, natural gas. If they're acting strong, then it's probably logical to go see which stocks in that sector might have the great strength. And if you do find stocks in that sector that are all coordinating or all correlating with good, strong signals, what can you calculate from that? That they're buying that sector. So if we're trying to put the stars in alignment where we've got all the probabilities in our favor, if we can see which way a commodity is moving, and we can also see that all the stocks in that sector are being bought, that's not from the little guys or just a few people buying. That's from institutions and everybody buying that sector. And that's where we want to be, where the sector that everybody is buying, we just happen to be able to get in early. Same scenario on silver. If we can analyze what's going on with silver, there's a fry pan bottom breakout of silver. What do we have going on? This is our classic pattern, right? Fry pan bottom followed by a J-hook pattern. But what's it telling us right now? What's the sell alerts that might be occurring right now in this sector? Look at them gapping this up. Gap up, gap up. Where do most people buy? They buy enthusiastically at the top. What's another factor that tells us we might be getting near a top? Wave 3 is pretty much now the same magnitude as wave 1. We're in the overbought area. They've been gapping it up. Wave 3 is the same as wave 1. What do we want to start watching up here? Be a little bit more diligent for watching for sell signals. So, but when this one started, we could find other positions that were doing the same thing. Pause, a fry pan bottom breakout. Again, 2 + 2 analysis. If silver prices are moving up and the silver stocks are moving up, which ones have which ones are having pattern breakouts? Whoops. Oh, I'm supposed to have 2 or 3 more there. Do you loom at silver? Do you look at silver? Is that what you're saying? You can. I can look at silver because I've got my charts. I can go right to the silver commodity. Or you can look at SLV. That's reflective of the commodity itself. Oswald, 2 + 2 is just a simple way to state that if I've got more than one factor, that if silver prices are moving up strong and I can see a stock that has a pattern breakout, that's 2 + 2. That's additional information confirming that I'm probably in the right direction at the right time. So very simple logic. if crude oil is doing this, coming off a bottom and starting back up above the T-line, what do we probably want to be looking at? We probably want to be looking at stocks that are related to crude oil prices and find the ones that have the strongest signals. Halliburton, doji, 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 best friend gap up, starting the uptrend. Now on the other side of the coin, if you're looking at crude oil right now, what's that tell you about the strength of that sector? Crude oil doesn't seem to be going anywhere. It's hovering in here. So maybe crude oil stocks aren't the best, or going to be the most strongest. It could be, but what did we want to see on a scoop pattern? We wanted to see that slingshot effect. Might still be there, but right now it's not telling me I want to be looking at crude oil stocks. ZK, it's just a matter of visual estimate. If that's wave 1, wave 3 will be approximately the same. We'll get to, let me see if I can find some other waves in here. And it's not doesn't need to be an exact calculation. If this is my approximate move for wave 1, that's approximately the same move as wave 2. Do I start wave 3? Does wave 3 start from here or start from here? It doesn't really matter. As long as you can see a next wave is setting up, you're going to watch it. But what's the most important criteria for seeing when this wave will end? The sell signal. Now, ZK, I only count 3 waves, because after that, it might be doing something completely different. If this came up here and did a sell signal and pulled back and did another buy signal, I'm not counting wave 1, wave 2, wave 3, wave 4, wave 5. I'm counting wave 1, wave 2. Now we're starting another wave 3. Angela, that is what you'd kind of suspect. But we haven't seen, whoops, where did it go? We haven't seen a sell signal up here yet. So gold just keeps right on going. Now the reason we were going to do this, or we scheduled this session, is we were going to illustrate that. Look at the long-legged doji, a doji, some selling. That's probably the top, and it was going to pull back, and then we were going to illustrate how this was time to sell stocks. But as you can see, they never really confirmed, so you really have kind of a little slight J-hook pattern that might be continuing this uptrend. So is gold over? Right now, it hasn't told us that it is until we see that sell signal or a sell signal. And we are going to be working on the candlesticks and gaps. We've been doing a training session not too long ago. Does wave 1 and wave 3 start at the breakout points? No, just somewhere, just, again, it's not an exact calculation. All you're really doing is saying, if this is wave 1, this might be wave 2, wave 3 is going to be about the same level as wave 1. And when I say what would be sell signals, Carol, there's the 12 major signals. Those are your bread and butter that that should be the first thing everybody learns about candlesticks, is the 12 major signals. You're going to get 6 longs and 6 shorts. And I don't have time to go through them all, but that's kind of a bearish engulfing signal, one of the 12 major signals. Bill, yes, and that's one of the fallacies about investing. People think I'm going to take a profit at a certain level. Well, the market doesn't give a hoot what you're doing. What we're interested in is, if we're in an uptrend, what are the parameters for keeping us in that uptrend until it's time to close out that position? And very simple. You stay long until you see a sell signal and a close back below the T-line. What we're looking for, obviously, is the strong signals. Is a long-legged doji at the top of a move part of a signal? That is the signal, yes. That's part of your learning process. Learn the 12 major signals. And once you understand the psychology that created those signals, and that's the great advantage we have from what the Japanese rice traders have provided for us over 400 years. They've not only illustrated what the signals look like, but they've told us what the psychology was that created those signals. A doji means indecision. And if you see an indecision in the oversold area or the overbought area, there's a very simple rule. The price will usually move in the direction how they open after a doji. So that's why you want to learn the 12 major signals. That's your bread and butter. Then there's about 8 candlestick patterns. And the patterns are created because human nature works the same way time after time. Is an engulfing bearish candle above the T-line still a sell signal? Yes. Remember, the T-line is just an added confirmation. The most important criteria is the signals and where they occur. And that's where we're going to get into some more training here pretty soon of not being, what do I say, totally dependent on the best criteria is you stay long until you see a sell signal and a close below the T-line. And or if you start moving too far away from the T-line and see a sell signal, where's it going to move back to? Probably back to the T-line. Would following the dollar index be a way to confirm gold signal? It could, yes. It's usually one affects the other or vice versa. That could be. And again, Diane, we don't know how far gold is going to go up. So all we can do is if you're long, you stay long until you see a sell signal. So the implied information that we get based upon the graphics of human nature, the best friend signal, a doji gap up. That's why we started buying DICs, because it broke through this level with a best friend signal telling you we're in the next wave. Where was our sell signal? There was a doji harami opening or trading lower the next day. It was time to take profits. We recommended, whoops, I got that out of. This one. Recommended this one the other day. There's your doji gap up. Again, 2 plus 2. Your best friend signal up above the T-line, off the 50-day moving average, and breaking through this level. What can we conclude just logically by watching what graphics we're seeing here at the 50-day moving average? This is where everybody's decided they're buying. Others use EMA, SMA 20, how the T-line is the 8 exponential moving average. I can take everything off this chart, use the stochastics, the T-line, and the signals, and I'd make very good money. If you want to add, I've got the gray line, which is the 34 EMA, which works reasonably well. We have the 50 and the 200 on here because that's where all the major money managers around the world make their decisions about their portfolio. If somebody says put the XYZ indicator on, you can put it on, and if it works to improve the probabilities, keep it there. If it doesn't, take it back off. But the number one criteria for doing anything is the signal itself. Everything else is just a confirming indicator. Looking at our RC chart, would you say it is sending a sell signal? Possibly. So I would pick a spot that would say, after this doji, shooting star, maybe I don't want to see it trade back below this level. Or maybe I don't want to see it trade back, if I'm going to trade more aggressively, back below today's low. So we're looking for the signals that put us in situations where the probabilities are greatly in our favor. We started buying plug, or recommended plug, the other day because of the kicker signal. A hammer, look at the 34, how it acted as support. We had a kicker signal, your strongest reversal signal. And then we had a gap up. Now, when we do gaps, remember, we say if you see a gap up in the overbought condition, that's exuberant buying, that's the exhaustion. Except if it's a gap up through a level that everybody else is watching, like a resistance level, that's usually a breakout. Al, usually I won't do options on the lower price stocks. I'm usually trying to keep with the higher price stocks. And higher price stocks might be anywhere from $40 and above. Now, that doesn't keep me from buying options. We were buying options on this one because of the strength of that signal, even though it's about a $9 or $10 stock. But that's up to each individual. You can make your choice of what options you want to trade. Can J hook pattern get a good result during crisis? Like, it doesn't matter what the crisis is, and it doesn't matter what's going on. It's not the pattern being affected by what is going on in outside events. The pattern is the accumulative knowledge of everybody buying and selling with the knowledge of what's going on out there. So you're investing in the patterns because everybody knows what's going on and making their decisions. You're just seeing what their decisions are. So the signals and patterns are on the basis that people are buying or selling based upon all the information that's available to everybody. So we're buying the patterns. Two things happen. Three things happen. One, you're usually in the right direction. That's why we're looking at signals and patterns today. Two, the strong signals put us in price moves that are going to be a lot more, let's say, profitable than just merely an uptrending stock or in an uptrending market. And three, if you're in a pattern and the market all of a sudden turns, because the pattern was the accumulation of investor sentiment, more than likely you're going to have a little bit more time to come out of that trade because there's still an overall investor sentiment that created that pattern, that instead of that stock going south as fast as the market's going south, you probably get a day or two extra to get out. If I am not already in gold and I want to ride the continuing uptrend, I should wait until the prices close below the T line. No, I would probably wait until you see some sort of pattern pullback, like another J-hook pattern. So and we get this question often in the chat room. Somebody will say, "Oh, XYZ is doing great." I'll illustrate what a lot of people will ask, and the answer is, if the stock has already moved up good, the only reason you want to get in it is because people are in it and it's moving up good, and you don't want to be left behind. You think it's going to go higher. That's not the effective way to trade. Two things come from that. One, you should go back and look to see why that was being bought at a time that it should be bought. I just said two things, didn't I? I can't think of what the second thing is. That's just great. Oh, so that kind of trains you to start looking for the patterns or signals that started that uptrend versus jumping into something where the probabilities aren't in your favor as much anymore. What is the equivalent? A bearish J-hook pattern. Looks just like a J-hook pattern, but to the reverse side. With plug, the fact that it closed above the resistance confirmed the upside potential. Yes, I would. Again, what's happening here? You had a buy signal, and they're gapping it up. You had a buy signal, and they're gapping it up. What does that gap up mean? Most money managers tell people to stay away from gaps because you don't know what's going on. With candlestick analysis, you know exactly what's going on. We've had a reversal, and now they're starting to gap it up. We've had a pattern breakout. Now they're starting to gap it up. That means people want to get into that position with great enthusiasm. Hold on to your individual stocks until I tell Jim to do the double line, which might be a long time from right now. That's, yeah, the fear of missing out of a trade. And that's where I learned that if I saw a trade that was moving, somebody say, well, should we be buying here? The answer is no, you should be buying when you see a pattern that's starting to break out. And this is the advantage we have of knowing what signals and patterns do as far as we can see the fry pan bottom breakout. So right now we are in riot. We were debating whether to hold positions going into the close. It looked a little bit tentative, but right now I think it was trading up a little bit after earnings came out. So right now, because of the wedge breakout, we have to assume that, especially coming off these buy signals, and we're not in the overbought area, but we're probably still in an uptrend. So what I'm going to do right now is do a quick process of, Jim, I'm going to have to shut this down for a second. A quick process of how to do scans very simply. I'm going to use TC 2000, and the reason I do this is I've got one of the older versions where it's not all automated. What chart timeline do you use to evaluate your charts? What chart timeline? It doesn't matter. Whatever. I just use a chart where I make it big enough or small enough that I can see what I'm looking at right here. Then I can move it back to see where it is in a trend. Yeah, I usually, again, that's all on the basis of what your time frame is. I'm a swing trader. That means my trades are going to last anywhere from 2 to 10 trading days on average. So I'm going to use the daily chart. The only time I start going to a intraday chart is on that simple rule we have about the T-line. You can buy when you see a candlestick buy signal and a close above the T-line, and stay long until you see a candlestick sell signal and a close below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if I'm trading intraday, today I was trading soybeans, I usually trade off the 10-minute chart, and then I've dropped down to the 5-minute and 1-minute chart. But these are all daily charts because if I'm going to make my analysis for a swing trade, I'm probably going to do it off a daily chart. So if I'm looking for, I've got a very simple process. Here's my trading universe. These are all stocks that are trading greater than 5 and trade more than an average of 200,000 shares a day. Now you can make your universe whatever you like. If you're an option trader, you might bring your universe down to just trading optionable stocks and find which ones that look good. VJ, the T-line is the 8 exponential moving average. For people that are new in here, the T-line, I've been trading for, I hate to tell you how many years, decades, but the T-line is the 8 exponential moving average. So here's the most poignant statement of candlestick analysis. If the candlestick signal is the graphic depiction of human nature, telling us exactly what's going on in their buying and selling decisions, which is just a graphic depiction of the bulls and the bears, which is very accurate because investor sentiment works the same way time after time, year after year, decade after decade, century after century. The T-line is the 8 exponential moving average. It acts like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. So if you combine those two, you've got an extremely high probability, powerful combination of indicators that tell you when you're in the right direction and what's going on with your trades. That combination is as accurate as I've come across. Now, you can see how simple my charts are. If somebody says, put the XYZ indicator on, put it on. But the most important factor is the signal and the pattern itself. The further away you move from the T-line, is that a gut feel or do you have, no, it's a visual. Let me go here. Let's see. I don't know what I'll be able to do this correctly. Right here. Nah, I can't. I want to make it bigger. I'll come back to that. Who was asking? Diane. I'll come back to that. It's not a feel. It's when you can see that if the T-line's been a factor, and then all of a sudden you're starting to move too far away, and these charts are. That's when and especially up in the overbought area. So I'll illustrate that when we go to live charts. All right, so my simple scanning is that I'm in my trading universe. It takes the total 9,500 trading entities down to 3,400. And then I look for the stocks that had the biggest percent moves today. And I'm seeing a lot of fry pan bottom breakouts. So there's stuff that have already occurred, or if they aren't big enough or big, might be something to add to. But if I want to find out which sectors acted the best today, I can go up here and say, all right, I want to go to the different lists. And on this system, it's Morningstar industry groups. And I can scan just the same as I would in a for stocks. So as you can see, this one had a big percent move. It was food and beverage, dairy products. So I might not have any idea what stocks to be buying or looking for in there. So you can come up here and you click on this, and it brings up all the, oh, that's not good. Let's go back here and see if this does any better. Okay. All right, 148. So now I can look at the stocks that had the best price moves in here. And again, I want to try to stay with stocks that are above the $5 level. And I'm scrolling down here real quick. So this one had a good chart. This one looks good. So I can scroll down here pretty quick and see which ones had the best charts. And I can put those on my watch list. So again, I can go back up here, and if I don't see a whole lot in that sector, I can go down to the next sector, long-term care. I come up here and I say, all right, what components are in the long-term care? This one, OTRX, little J-hook pattern breakout. There was another breakout. So I can go down through these charts pretty quick and see there's kind of a breakout. There's, that's not a good chart because it's so I can do that. I'm doing this all quickly because I can find the ones, and kind of what I do, if I like something, I click on it and I save it. And then let's say I've gone through and found 8 or 10, or let's say 3 or 4. I'll come up here and I'll copy all those over to my watch list 6. That's my bucket watch list. So I can keep doing this to see which sectors. So there's a couple quick ways to do scanning. First, just scan the general market or by universe. Go down to see which sectors have had big moves today. Transportation, air service. I know this is good because I've already seen a couple like this one, kind of your cradle type pattern. So I'd click on this one, and I'd keep going down, and I might find there's a doji sandwich breakout. So I might click on this one. So I might find 6 or 8, and so I know that sector is pretty good because a lot of them are being bought, and I'll pick out the best ones and I'll put them back up here in my watch list 6. When you're looking for the different charts inside of a sector with greatest move, what are you looking for specifically? The same signals and patterns that we would look for on anything. And that's not as specific when I'm just hunting them down in that case. I'm looking for stocks that had a price move that looked pretty good and has a potential pattern to it. And that's about all that I'm doing. So this one, I can see real quick, fry pan bottom, or a doji sandwich breakout. Let's click on that. That's about all the amount of time I would do on the analysis of that. See if I can find something else to. There's kind of a little cradle pattern. I might click on that. Now, that doesn't necessarily mean they're great. I just want to look at them again. That's why I'm putting them on my list. There's American Airlines. That looks like it could do a doji sandwich breakout, so I click on that. And then I move them to my watch list. So what I can do it that way. Meaning, one way to do it is I can scan for the different sectors. Now, what will usually happen is if I'm scanning through my trading universe, I'm more than likely going to see them duplicated over here. So if I've clicked on them, I'll click on them again if they're the same one. And so another way to see which sectors are acting the strongest is if I go through my scan of my universe and I see 3 or 4 airlines up near the top of my scans, I've already got the assumption that the airlines are probably being bought. So I've already got that in the back of my mind. For TC2000 version 20, if you add a new layout tab, there is pre-built one drill down that sets up the sectors and lets you drill down to stocks. Works well. Yeah, Terry, thank you. The reason I'm showing it, or have never upgraded it, which I probably should, was I want to show the mechanics of how you can get there. If you've got TC2000 or Metastock, they're already well upgraded, and so what I'm showing on a mechanical basis, they've already integrated into their scanning, which will go a lot quicker. What we're looking for is not only the scanning, but having the ability to see what we're looking for, meaning learning the candlestick signals and patterns, and then be able to put them into a formula or have them in a formula in the scanning softwares so that we're finding the best charts right away. I probably should look at them. I'm afraid it's like teaching an old dog new tricks. Yes, we do want to find those stocks before they make their moves. So when I've gotten done with adding everything over to my watch list 6, I better do this here real quick. I've done this from the previous day. I'm going to clear these watch list 5, watch list 4. I'm clearing out those. So if I go back up here, all the ones that look good I've got over here in my watch list 6. Well, there's 75 of them. There wasn't 75 today. That's just the ones that we clicked on. I haven't updated today. But I can go down and start looking to see which ones are the best looking ones that I've got on my list that haven't moved away. Maybe Kendai with the kind of the J-hook pattern. CPA. I'll click on this. Now what I'm doing is I'm looking at the charts with a little bit more scrutiny now. Again, there's that fry pan bottom with a doji sandwich coming out the other side. That's good. So I'll go down through and maybe find out of the first 75. Now I know the 75 that I have on here, the better ones are still going to be toward the top. The ones I put on 3 or 4 days ago that haven't worked are way down. So I don't have to go through all 75. So here's one that might be setting up with a doji gap up from a bearish candle. That might be a bullish flutter kicker on positive trading tomorrow. So I'm picking out the ones that look good. There's our doji sandwich breakout. I was going to recommend this one today if it opened positive, but we had others that I recommended. So this one now has done the doji sandwich, so we can click on that. So what I've done basically, here's wave 3 starting off your left-right combo, is when I've gone down through this, maybe I've picked up 12 or 15 that look good. Here's Alcoa. Look how it did a fry pan bottom and a doji sandwich through the resistance level, and now potentially another doji sandwich setting up. And let's say I've done this and I've got 15 stocks. So what I do is I come up here and I copy them over to my watch list 5. There won't be 15 because I didn't click on that many. So I start the process all over. And let's say out of the 15, I've come down to 8. And then when I get down, take that up to watch list 4. Now I'll start going back through and saying, all right, which ones are the best ones of these? And the best ones is where that's where your education comes up. What is the name on the screen you are looking at? What is the name of the screen you are looking at? This is TC 2000. I think the 2007 version. Top left corner. Telechart Platinum. So the stock, this one is screen sharing. Ahmed, I don't know what you're asking. This whole setup is TC 2000. This one is the Platinum, which shows everything live. Their Gold just does after hours, or it's 20 minutes delayed during the day. All right, so if I'm looking at the best sectors, trying to find the best stocks in those sectors and move them over to my watch list, now I can run through, and I'll keep going through until I've narrowed the list down to maybe 3 or 4. And those are the 3 that I put out for recommendation. Now, the reason I tell people to learn how to do the scanning yourself is when I've done my 3 best picks for the night, I'm just going to hypothetically hit this one, hit this one, and hit this one. Well, let's say we wake up the next day and this one is opening down here. Now, that's not going to work. And let's say this one, which we expected a positive open, is opening down here. So I've got 2 out of the 3 that I had picked that aren't working. But I still have a list right here that maybe this one that I didn't pick is opening positive. So I still have a supply of stocks to go after, even if the ones that and the only reason I picked those is just so that we would have something to put out as picks, not so much so people would have picks, but see what the recommendation, why that recommendation was being made. When you have narrowed down your picks, do you care the market cap size? I've already built that in. Again, I don't want stocks that are trading less than 200,000 shares a day, and I don't want stocks that are trading below $5. The reason the $5 is because most brokerage firms will not margin a stock that's less than $5. And every time I put on a trade, I know that I've got the probabilities in my favor. I'm trying to get as much leverage as possible. Okay, so now, Jim, I'm going to shut this down one more time, and then we will go to live charts. Make sure I'm doing, when you're ready. All right, so the nice aspect of candlesticks is everything in a candlestick chart is just common sense put into a graphic depiction. So you can start with step 1, which is if we can analyze relatively correctly the direction of the market based upon candlestick analysis. Remember, this had this breakout of this resistance level telling us this wedge formation is now telling us we've got probabilities that we're heading higher. So here's the reason why you always want to kind of look for confirmation. We recommended this chart. It looks like a great chart. Fry pan bottom, J-hook pattern that broke out. We recommended this on the basis that if it traded above 52.05, it was probably heading in this direction, breaking out. Well, it opened and went the wrong way. So what did that do for us? It kept us out of getting into a trade that wasn't working. Now, that didn't mean we left this or took this off our charts. It still got this J-hook fry pan bottom trajectory. We'd still be buying this if it comes back up through this level. So not only do candlestick signals tell you when to get in, it keeps you from getting into bad trades as well. That's why you want to see confirmation. If you're looking at a, now I'll find one. I'm going to say, if you're looking at to get in, what do you want to see after a buy signal? You want to see that they're buying. So we recommended this on positive trading today. Now, as who was asking? Will. Was Will asking that that we want to get into Jake, we want to get in before the big price moves. But We're not trying to second guess the market. This is the signal. It tells us we're getting ready for a big price move. What's our price move? Wave 1, wave 2, going into wave 3. We call this the bobble pattern, which is just a more, didn't you get into LRN and it went the wrong way? I got into LRN yesterday on a partial position with the anticipation that if it opened positive, I would add more to it. And when it didn't, when it did move, I just haven't done anything with it. I've still got a partial position. But I'm not giving up on it, on that partial position, because it didn't close below the T line. So a J-hook pattern is a wave 1, a wave 2, a wave 3. A bobble pattern is more defined. It's a J-hook pattern where you can exactly see where the resistance level is. In this case, you can see it's the 200. And then you can see that it held right here at the T line. And what was our entry? The fact that they came back up through the resistance level, telling us if you took out this 200, you've got a wave 1, wave 2, wave 3 J-hook pattern. So this is because we know exactly, or with a good high degree of probability, of what human nature does as far as moving in waves. Apps was this little slow curve. Look at the breakout. The breakout level right here with a doji. This is one of your strongest, highest probability, let's put it this way, highest probability of a strong trade breakout. Because what do we know about the doji? We've got the doji rule. So if we can see a doji smack dab on a resistance level, and the doji rule says it's going to move in the direction of how they open it after a doji, if it opens positive, we're buying immediately because we know that this resistance level is not acting as resistance anymore. We're in our next wave to the upside. The J-hook pattern is a J-hook pattern without anything here at the resistance level other than the previous high. So you can see exactly when this one started. There's your little best friend breakout. There's your profit taking. There's your little morning star signal. Starting back up. What do we expect from the magnitude of this wave right here? It could be the same as this magnitude right here. W workhorse. Yes, so here's one that didn't work. You had the potential fry pan bottom breakout. So what are we looking for? If this was kind of a breakout through this level, what's this signal right here? That's your bearish Harami. What's that bearish Harami tell us? The selling or the buying has stopped. I would have closed this one out if I had bought on the basis I was expecting a breakout, because right now it's not telling us anything. Okay. I'm going to, these are the ones that we've recommended here recently and the reasons why, so that you have a feel. There's that kicker signal on plug, and then they gapped it up through this level. SRNE, I'll try to go through these fast so we can get to the ones that look good for tomorrow. There's your slow curve. Look what it did at the breakout. It gapped up through this level. So you can see what the trajectory was here. Now you can see what the trajectory is here. That's not an uncommon result. Good, Bert. That's one of the hardest things I had to do, was kind of telling myself, oh, I've got such a good chart here, and it's not working. Oh, man, I'll hold on to it because I think it should be working, instead of telling myself, this one's not working, close it out and move on to a better situation. And this is the advantage of a chat room where everybody's watching the same thing. Look at your fry pan bottom and look what's happened here. You could pretty much draw a line right through the tops here. And I guess I could have drawn a better line through the tops. When they broke out of this fry pan bottom, what do we expect out of a fry pan bottom breakout? A very strong price move. Slow curve is probably one of the most profitable patterns to trade, yes. Now this is not a slow curve, this is a fry pan bottom. A slow curve usually is it's in an uptrend and it's usually a much quicker breakout situation. Blink, there's your fry pan bottom breakout. There's your uptrend in progress. There's your slow curve right there. And notice what the slow curve couldn't do. They couldn't close this below the T-line. This is what our expectation is coming out of a slow curve. Phil, there's a very simple philosophy. If you're buying based upon a candlestick buy signal, you're selling based upon a candlestick sell signal. And when is a candlestick sell signal completed? At the end of the day. So everything in between during the day is just noise. It's the important factors is what is it, where did it open, and where is it going to close. I'm still in blink, yes. Why? Because we really haven't had a sell signal, and we haven't closed below the T-line. Let me see. So here's another wedge breakout. If I can draw this, you can see the little wedge type formation. And how did they come out of this one? With a little doji sandwich breakout. And there's your results from that. I didn't realize it was up that big today. So if you're watching what other people are watching, which is the signals or the different patterns like the wedge or the pennant or whatever you want to call it, we have an advantage to see what's happening. Like, that just makes you want to kick your grandmother. There's your J-hook pattern. There's your slow curve breakout. Isn't GSX a slow curve? Well, you could call it a slow curve or a wedge breakout. Doesn't matter. Doesn't matter in either case. The probabilities of it going higher were strong. Do the slow curve and fry pan bottom portend different results? Not really. A fry pan bottom usually occurs a big, long, sweeping pattern, usually at the bottom, whereas a slow curve is usually in an uptrend. Sienna broke out through this level. And how did it break out? It gapped up through that level. What do we got going on right now? This is what we call 45 degree. See the breakout? Now it stays in a 45 degree. And very simple rule on this one. You stay long until you see a sell signal and a close below the T-line. There's your bobble breakout on simply. Just staying long as this stays above the T-line. But you can see the bobble. Came right up, and what happened? A doji selling right at the 200-day moving average. Where did it bounce? Bounced right off the T-line, which nobody has on their charts. So we can see much more clearly where the support level is, and we get ready to buy if it comes back up through the 200. Here's the steady eddy. Darn. Just, that's not what I want to do. Oh no. I've clicked on something that, yeah. This one's been a nice steady eddy all the way up, overstock. These are the type you want to get stuck in. Because what's your analysis on this trend? You stay long until you see a sell signal or a sell signal and a close below the T-line. So if I'm analyzing this position every day, it takes me about 2 seconds to analyze that. We're still above the T-line. Let's go to the next chart to analyze. So what we're starting to see here in the gold stocks is, notice where most people buy. They buy exuberantly at the top. That was a good place to take profits. There was our Morningstar type signal. You could buy back. But what happens when you start seeing that first selling? That tells you that's where people are starting to sell. So now you're going to be a little bit more diligent that if you see another sell signal up here, that probably means you've gotten pretty much the most out of that price move. So you can see how we had a gap up in the overbought condition. You can see how we had a sell signal here. Now they've come back up and they're selling again. What's the trajectory of this? It's starting to get a little bit toppy. So this profit move is now pretty much at an end. This tells you the probabilities are now less likely that we're going up strong. Let's go find another chart that looks like this. You've got a left-right combo here, but it didn't confirm. This is kind of when you gap up in an overbought condition. Very simple exit strategies. If it gaps up and starts trading positive, you put your stop just below where it opened. Logic says if it comes down through there, the seller has started. Or if it opens and immediately starts selling off, you put your stop at the previous day's close. Then you can see you've got a bearish doji sandwich. They closed below the T-line. They've tried to bring it back up, and they're starting to see more selling. You're starting to see selling up here. Means most of this is gone. Probably want to start moving to someplace else. Why? You can see the cradle pattern. Bunch of little flat trading and moves back up. You can stay long on this one. I wouldn't go short. Just because it is being sold doesn't necessarily mean they're selling it hard. No. That's the exact question that you ask when you're asking, can you buy it here? The answer is, why would you buy a stock that's moved up, in this case, about 40% in an overbought area? So the rhetorical answer is, where should you have been buying? You should have been buying as the pattern was breaking out. So everybody is worried about they're missing a good price move. Yes, but the benefit of candlestick analysis is you're going to be able to find the next price move before it moves. And Rollins, this one has been a good steady eddy. It's never been able to close below the T-line. PNR, this is a 45 degree. Look how they popped it up. This is what we call the message. Look how they gapped it up and then pulled it back. But what was the message? They gapped it up. Then there was profit taking. What did that gap up tell us? There's a lot of new interest in this stock. So what are we looking for? We're looking for the profit taking to be over, and then we can start buying, because this message told us there's a lot of new interest, powerful interest coming into this stock. Well, CDE was another one that has sell signals, but the sell signals, I've done something severely wrong. Isn't really greatly relevant, even though it's a left-right combo. What pattern is this setting up? Again, this is what we call the classic pattern. Fry pan bottom, strong price move. J-hook pattern. What's a prerequisite for a J-hook pattern? A strong price move. What's our expectation of this price move? To be the same as this one. PNR, we would have started buying right in here for two reasons. Because it told us the message profit taking was over based upon that little doji. Then it opened positive after a doji, confirming our message. Would have been buying right in that area. Gerald, hold on to your individual ones. I'll get to Apple, which is pretty much the next one anyways. Oh, the shorts. There's your kicker signal to the downside. This is one of the exit points that you want to, if you got a good strong price move, and then you see it gap it down, they gap down below the previous day's open in the overbought area, there's only one thing that you want to do. Close it out immediately, because that's setting up for your bearish kicker signal. That was a bearish engulfing signal on CDE. Yeah, what is our pattern? We're still in this pattern. We'd still trade above the 3T line. Still want to see if this continues to trade higher. If it starts trading lower, yes, we'll close out the position. If Run has a doji and buy Friday, what you do when you're going into earnings is you want to see what they're doing as they're going into close. Are they announcing earnings Monday after the close? If it's Monday after the close, still trade this Friday, and then Monday we see how they close it. If they closed it like this on Monday, that would probably tell me I'm going to close out the position because there's not a lot of buying with them about ready to report earnings the next or this afternoon. Which one was it? S-Fly. F-Sly. That was going into earnings. And they were selling it off going into earnings. So what should you do? You closed out the position. NVIDIA. Still heading up, but you can see that it's starting to get a little bit tentative up here. In the overbought area, doji, a hanging man. We moved a little bit away from the T-line. So where's a logical place to put a stop loss? Right here at the low of the doji, or the hanging man. Because logic says if it comes down through there, where are they heading to? At least back to the T-line. Tesla, flat as a pancake, not long or short on this one. Apple had a good strong day. This is what it usually does. There's your trend, there's your pullback, they gap it up right back into this trend. And usually what will happen is, here's your trend, here's your little J-hook pattern. So the trajectory of this is now a trajectory like this. Amazon, nothing. Not until they break out through this level. But you can see the fry pan bottom. You'd have to wait to see. Yes, I wouldn't be buying here because you're in an overbought area, starting to see potential sell signals. If I was wanting to get in, I'd probably wait for it to pull back and then see what it does at the T-line. Hold on to your individual requests until I tell Jim to do the double line. you'll probably see a lot of what you're requesting as we go through. So here's Netflix. That's still acting right as long as it stays above the T-line. All right, so here's some that look attractive. Freeport, because of this little gap up going into wave 3. Again, that was the same, same scenario we did right here. LPSN. These are the type of things that we look for. Now, they gapped this up and did a shooting star doji. So what's our trading rule? It's going to move in the direction of how they open. Well, they opened and immediately took it up. What's that tell us? We're probably going to be in this trajectory. Yes, because plug just gapped up starting a trend, whereas NVIDIA has been in a steady uptrend and now getting near the top. So the fry pan bottoms are what you look for. This was a perfect buy right about there. The fry pan bottoms, this was a doji sandwich breakout of a fry pan bottom. These are just high probability trades. LPSN, I'd put my stop right here. If it came back down through there, there's trouble in River City. Funko, nice slow curve, almost kind of a wedge formation. This one could be bought on positive trading. Where's your next likely target? Possibly all the way up to the 200-day moving average. PCAR, there's your J-hook type pattern. And notice your little best friend gap up. Where's your next likely target? Wave 1, wave 3, probably getting pretty close to 100. Maybe, what does this move? 75 to 87. I can figure out 12 points. 12 points from there would take you right up to about the 100. Do you hold options over earnings? Again, depends on what they look like. Just as a small trade, we were owning options on this one because of the fry pan bottom. I usually don't buy options on a low price stock, but because this was bopping around so much, it was safer to buy the options. But I sold half that position today as it was selling off going into the close. Right now it's trading right about in here or so. So you want to see what the smart money or the people that know what's going on with the earnings are doing going right into the close. If they're buying, you stay with it. If they're starting to sell off, obviously they know something you want to close out. Here's a bobble breakout coming out of a fry pan bottom, PBPB. This one you could be buying also because of the fry pan bottom breakout, number 1, and the bobble breakout, number 2. ECPG, look at where your fry pan bottom breakout occurred. So this is not rocket science. The force of buying and selling based upon human nature could pretty much be graphic, that's a new word, be seen on a graphic basis. Whoops. There's your fry pan bottom, there's your breakout. And here's RRR. That's laughter from a pirate. Fry pan bottom, if this opens positive tomorrow, what's it telling you? Pretty much that they're made it through the 50 on a bobble breakout with a doji sandwich. Fry pan bottom, where do you think your next target would likely be? Right back up here. Okay, INFN. There's your kicker signal. This is one of those that probably on that signal I would have closed this out if I'd been long. But then I'd be back in it because of the kicker signal. When does kicker usually happen? In overbought or oversold? Any significance? No. It doesn't. The kicker signal is so strong that it doesn't matter where it occurs. The stochastics have nothing to do with the effects of a kicker signal. So when you see a kicker signal, it's telling you there's been a dramatic change of investor sentiment no matter where it did it in the trend. Another fry pan bottom, little J-hook pattern, breakout, there's your next likely target. That's the slow curve. This is what we kind of look for. Let's see, did we do Kendai earlier? Kendai is doing kind of this J-hook pattern, a little left-right combo, which is one of your strongest signals. Let's see, INFN. Yes, I wouldn't be afraid. I would consider this a wave 1, wave 2, wave 3 being of this magnitude. A-bus. Another one. Look at your little morning star signal. And a morning star signal is a big down day, an indecision day. Sometimes it has two indecision day, and then a big up day that closes more than halfway up this candle. Now it did a doji. What's our doji rule? If it opens positive, you can be buying immediately, because now you have a morning star signal with a doji sandwich. That's what we call a McMuffin, a morning sandwich. I think I was showing this because it's now broken out. Look at kind of the cradle pattern. Big down day, flat trading, a big up day, taking you up to the next level. Arlo. Is this one still buyable? It is in the sense that this is what we call a trend kicker signal. Look at the fry pan bottom. Look at the breakout. Look at the inverted hammer confirmation. Now you've got a trend kicker signal. A trend kicker signal is the same as a kicker signal, except it's already occurring in a trend, and it usually implies there's going to be more upside. And TRUP, that little, now this was to illustrate. There was trajectory 1, there was your little J-hook pattern, trajectory number 2. Can you say the same about the strength of a best friend signal that you did about the kicker signal, that it's so strong, it's still effective? Not necessarily, no. If I see a best friend signal, it better be part of a pattern. But if it occurs well up in the overbought area, you're still you're still want to be a little bit more diligent as far as you're up in the overbought area. You could buy, again, where would you want to have bought this? Probably right in here. But the trend kicker signal says you can buy it, but you'd be a little bit more careful. Where am I? EHTH. There's your doji sandwich, close above the T line. Where's your first target? Probably up here at the 34 would be right at that level. Is wave 1 often considered the uptrend? Yes. Wave 1 is that strong price move before you go into the J-hook. Jake, there is scans for for the doji sandwich. Jim, is that down in our little file? Dorcas, yeah, this is being recorded so you can see the end of it. It's just more picking out some good stocks. There's a kind of a scoop type cradle pattern doji sandwich. If this trades positive, this is CPA, which is one of the airlines, Copa Airlines. CBA, kicker signal. That's what creates a very strong price move. Do trend kicker signals have the same above the T line have to be bought with a stop at the open of the bar? That's probably a safe place, is the open of that kicker signal. If it comes back down through there, something's wrong. Okay, a few more. This is why we teach people to kind of pick out 4 or 5 different patterns. Look at your kind of your cradle pattern, smack dab off the 50. Back up through the T line. Doji, doji, doji. Breaking this level. And where do you think everybody was buying? Well, we can see that everybody was buying right here off the 50-day moving average. All right, I'll repeat the same thing. Hold on to your individual requests until I tell Jim to do the double line. CHDN. Observe the obvious, right off the 200-day moving average, which is acting as support. A big left-right combo starting your uptrend. So the graphics of candlesticks allow us to see what everybody's doing at levels that everybody is watching. We can see immediately what type of what they're doing at those levels. So let's see, we're already way past time. So is there any general questions on candlesticks? This is where you always have your stop at a safe place, like the previous day's low, because it shouldn't come back down through that level. Yes. If you find dojis, especially if you scan for dojis in the oversold area and put them on a list, then the next day you can see which ones are opening up the strongest, giving you a, or even a gap up, giving you a best friend type signal. Okay, I guess with that, if there's no other questions, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. On Upworks, stayed in, when should I have gotten out? Now in negative. Jennifer, look what happened here. When they gap down below the previous day's open in an uptrend, what's that telling you? The bears are in control. In Upworks, when they announced their earnings and they gapped it down, it traded up for a little bit, but a very simple rule. If it was trading up and creating a green candle, that might be good. But as soon as it came back down through the open, what color was that candle turning? Back to red. That was where you should have closed out the position. So this is the nice thing about candlestick analysis. The stop losses or getting out of bad trades are very easy to recognize based upon the simple logic of where the price should not be trading based upon the candlestick signals. GDX, you stay long. It's getting a little bit toppy, but you stay long as it stays above the T-line. Ego, you stay long as it stays above the T-line. XTRM, did I do that right? XTRM did not show up. Clorox, all you can do here is stay long as this stays above the T-line. Shopify, stay long as it stays above the T-line. LAUR, that's setting up for a little J-hook pattern. I would suspect if it starts trading positive, your next target is the 200-day moving average. AES, that did go through the 200, kind of a J-hook pattern. Stay long, but I'd probably stop just below the 200. If it comes back down through there, they're having a hard time, obviously, getting through the 200. This was one where if you were in an uptrend, your safety stop was right here, you would have stopped out. Worst case scenario, you would have stopped out at the T-line. So right now, you should not be in this one. I don't know whether I'd go short, but I definitely would not be in it anymore. Would have stopped out. This is what you call a belt hold signal. There was nothing you could do about this. They opened down here. But the graphics, the candlesticks, makes this easy. But as soon as they started trading positive, what was that telling you? They were still buying. And the fact that they brought it all the way back up, this is called a belt hold signal. That tells you that they wiped out a lot of sellers. You can still be buying this one now on positive trading because there's less sellers in the way. Trade desk, kind of a bearish harami. I don't know whether it closed, but it closed up here weak enough that if it opens lower tomorrow, I'd probably come out of it. Just because it's going to go back to the T-line. There's a bearish harami. Had kind of a belt hold signal, but it didn't confirm today. I would have closed this one out today because that bearish harami told you the selling, the buying had stopped. You want to be someplace else. We did this with kind of a bobble breakout. You can be buying. This one is the typical, where do most people buy? They buy exuberantly at the top. If this opens lower tomorrow, and I had a position in it, I'd start taking profits immediately. Yes, that's the exuberance up there. And gold, this is where you want to be careful because you're starting to see them gap up in the overbought area. You still don't have a confirmed sell signal, but I might use today's low as a stop, that if it comes back down through there after a doji in the overbought condition, that's profit taking started. Momo, another one that has a fry pan bottom that can still be bought on positive trading tomorrow. And USDP, that's a nice fry pan bottom. Another one I would be buying on positive trading, confirming the fry pan bottom. Zoom is running into a little bit of problem up in this area. You can stay long as it stays above the T-line. And notice that it's using the T-line as support. Again, illustrating that that's a natural support level because nobody else has the T-line on their charts. IBM, nothing. You're kind of in a sideways wedge. I'd be someplace else. Oh, that's two symbols. All right. Wayfair, look at your little slow curve breakout. You stay long. You're in the overbought area. Your safety stop should be at today's open. And VMC, you can stay long on this, but you see where it has to get through. And it almost looks like this doesn't have a whole lot of volume in it, but right now it would just stay long. Probably wouldn't want to see it come back or close back below the 200. And BLFS, that one's running into trouble. You can see the doji bearish signal. If this opens lower tomorrow, I'd be out of it because you've lost all your trajectory on this one. Goog. Oops. Yep. Notice where it reversed, right smack dab off the 50. If it opens positive, it's breaking this downtrend. So you could probably do a call on that one. It has to be positive, yes. Yeah, holding over the weekend isn't any real dramatic factor because remember, everybody's buying and selling based upon their accumulative knowledge. It's the surprises over the weekend, which usually don't occur. There's a morning star signal that's bounced up off the 34. If this opens positive, confirming the morning star signal and telling you the T-line's not acting as resistance. And PEIX, J-hook pattern in progress coming out of the fry pan bottom. So this is your classic fry pan bottom, J-hook pattern with a morning star signal. And again, look how the T-line acted as your support level. Fitbit, nothing yet. If you have, yeah, nothing yet. That's the, even if it does move, the percentage return isn't all that spectacular. That's, you need something very confirming on this one. And Groupon, that fry pan bottom is in progress, but I would want to see it's not very decisive. You do have a cradle type pattern. If I was buying, I'd probably put a buy stop above this level because that would tell me that trend is now working. AZN, nothing at all. Would not be long or short. Let's see, we did Funko. Funko's in a fry pan bottom that can be bought on positive trading. Another fry pan bottom, but it definitely needs to get up through the 50. Yeah, a little, but it didn't open positive. So all you have is right now the left-right combo. So you need to have more confirmation. And same scenario there. Didn't open positive. It just traded positive. So you still have to get up through the T-line. It's when they do an inverted hammer the next day, they open positive and start trading positive. Skyworks. All you can do right now is stay long. You had a little morning star signal implying there's going to be more upside. And VXRT, if you're short, you stay short. Notice they've never been able to close it back up above the T-line. Even though you're in the oversold area, I suspect they're still trying to come down to the 50-day moving average. Sealed Air, that's a nice little J-hook pattern breakout. We did Goog. AHC, nothing to get excited about on this one. Not until you see something real strong happen. And SSS, that one's got a nice J-hook pattern setup. You can be buying this one. Just make sure it gets up through this level. If they come up and they do another sell signal before that get to that level, you close it out. Lows, slow, steady eddy, stay long. Home Depot, stay long. There's a nice J-hook pattern. You stay long on this one. STWD. You could be buying this one, kind of a fry pan bottom trajectory, but pretty much the fact that you supported on the 50 and started seeing buy signals, kind of a fry pan bottom with this being your dimple area. Look for a breakout. If they do, they're heading for the 200-day moving average. McDonald's. Nice J-hook pattern also. Your cup and handle. You can buy this one if it opens positive tomorrow. Matter of fact, that's a good looking chart. Nikola. Oops. Notice how, even though it's not going anywhere, every time they've opened it, they've taken it back up. After they open, you can get ready to buy this one. I would suspect they're coming up here to fill this gap. Pins, just stay long. LRN didn't confirm today, but it's still in this potential of a fry pan bottom J-hook pattern. You can be a buyer of this one if they come back up through today's open. Twitter, another doji sandwich J-hook pattern setup. You can be buying that one. That's a good looking chart. I'm going to put a little circle around that one. Bingo. You could buy this one. Make sure you got a lot of volume on that price stock. And Abbott Laboratories, just stay long. It's not very exciting, but if you're in it, I wouldn't buy it, but if you're long, you stay long. Facebook, stay long. Use the T-line as support. C, D, E, V, nothing. I'd be someplace else. We did Bigalow, we did McDonald's. What would you need to see for you to buy? On which one? Is that Agilent? Any commodities? Right now, I'd be looking to short wheat still because of the rounding top. You're getting toward the oversold area, and I thought, soybeans. Let's get rid of that. Soybeans setting up for not holding this area, could still be heading lower. All right, are we adding them right now, or, oh, maybe I didn't scroll down fast enough. What is this, DXCM? This one, to stay long, has to open positive and trade positive. Zoom, we did. This one needs to stay above the T-line. Yelp, still moving in the right direction, but you're in the overbought area with a doji. If it opens positive, you're still heading for the 200. Put your safety stop below today's low. Groupon, did they do something after hours? So they're up here. All right. So that's going to be a breakout to the upside. UNTY, nothing. AUY, one of the golds. You stay long, but you can see that it's getting toppy up here and indecisive. Left-right combo. So, like CDE, you want to see this open positive and trade positive. Gold right now is, it's still trading up a little bit. Newmont, stay long as it stays above the T line. FireEye, stay long as it stays above the T line. I'd probably have a safety stop below today's low. Doji sandwich. No, they don't serve doji sandwiches. Not quite a doji sandwich. It's more of a J-hook pattern or a cup and handle. You can see the cup, you can see the handle. And lift, that's a doji sandwich. That's a McMuffin. Morning star signal followed by a doji sandwich, your morning sandwich. That one you can buy. Oh, the McMuffin. Yeah, the McMuffin's that. Okay. All right, still lots of good charts there, and doesn't seem to be any great selling coming into this market. CRTO is getting soggy because of this right here, that it ran into trouble at this resistance level. You can stay long as it stays above the T line, but it's running into problems with that level. Agilent. Now I don't know what the sim was. What do you need? Yeah, I wouldn't be buying here, but if you were buying, it has to open positive. AUY is up after hours. All right, that means gold is holding up. All right. That's kind of a J-hook pattern, yes. So if this opens positive, it's probably going, that's right, a cup and handle is called a mug. Kicker signal, uptrend, fry pan bottom, you just stay long on this one. PRSC, another fry pan bottom type breakout with that best friend. That you should suspect more upside. And HTGC. There was your trend kicker signal. Now you ran into trouble at the 200 in the overbought area after a gap up doji. If it trades back below, if it starts trading lower, I'd close it out. Take your profits. PMT, stay long. Very needs to get up through the 200. I'm sorry, through the 50. And edit. Nothing. That's not a reversal signal. That's just buying at the 50. But that's not a good chart. I'd be someplace else. Okay, we're going to call it a night. We'll see everybody bright and early tomorrow morning in the chat room. We'll see you then.